Right, folks. So today was an interesting one. First of all, last night I did my research as to the stocks I wanted to strengthen, and the reason why I say strengthen, um, I'll take you back to stocks that I have in my portfolio, and I'll show you why. So I know it says here I'm down nearly £300. Just bear in mind that's not really down because I've already taken out a significant amount of profit from it. So actually, I'm not really overall down. I'm overall up, if anything. But anyways, I'm up by quite a bit. But anyways, it doesn't matter. Point of the matter is, my strategy is working. So right now, the stock is down this much. I knew this was yesterday. It was down 1.5%. So it's gone up by another percent, if you like, and in terms of going downwards, minus negative. Great, fine. So I knew this was going to happen, and I knew this is the situation. So what do? So if you look at my existing stocks like Auto Trader, British UK stock, it was down. Apple was down yesterday. I bought shares. I also bought more shares today, and still down. It's still down, man. But anyway, me buying more shares, I managed to bring down the sort of. So let's have a look at it. So prior to, when it was in green, I was up by 6%, 7% at one point last week or week before that, and so it was in green. I just kept it because it's a solid stock. I bought more shares as it was going down, and it still kept going down. So what I was putting into the stock wasn't enough to bring it down all the way. So I'm overall in negative by quite a bit. So what I'm going to do now going forward is I'm done for the day. I've tapped out for the day. Oh, NEO's down. Let's have a look at it quickly. So that's another stock I'm watching because this stock has got me money every time I bought it on low. I bought money. It made money twice. So once I bought it here, I sold it here, made money. It's dropped again. So I'm keen on buying, but I'll wait till Monday because I got no more money left. I'm done for the day. Anyways, I'll keep watching this. So going back to the Apple stock where I was, I'm happy to put more money into this stock as it's on a free fall, but I think I'm done for the day, so I'll leave it. I'll wait till Monday. If it continues to drop, which it will, it's likely, I will buy more shares. No doubt about that. So 1 year it's going down quite rapidly. So I'll buy steady shares. I won't go crazy, and then I'll see if it drops further. If it does drop further, then I'll buy more. Yeah, I'll watch that space. So because of stocks like Apple, let's go back to portfolio. So as you know, Amazon was 10% up today. Because Amazon was 10% up today, I sold Amazon for a profit of 10% ROI. So I bought Amazon. So I made profit on it twice. I bought it 4 weeks ago, then I sold it last week. I bought it again when it dropped drastically Monday, and I sold it today. So I made 10% on it in 5 days, basically. Great. I've sold that one for profit as well, 12% profit. I've sold that for 8% profit. So anyhow, I start buying again because they are down. Now going back to my stock. Currys, I decided to buy more shares of Currys purely because I do have a strong belief in that particular brand. I think it's struggling because of economy, but if I can hold on to it, look where it is. 3 months is quite well. Actually, I bought it here, so it's quite high, but it's dropped down here. It's recovering, but overall, within that 1 year, it's rock bottom where it is. I bought it quite rock bottom anyway, but it's dropped by quite a bit. So what I will do is on Monday, I will buy more shares to bring my overall purchase down as possible. So hopefully as soon as it goes up a little, I should be able to make a nice little profit on it. So that's the theory behind it. Same with EasyJet and Jet2. I won't purchase anymore. I'll hold them as they are. eBay, I did purchase a share today. That's another one I will put more money into, purely because it's one of the big brands and it's down for other reasons. So if you look at the 1 year graph, as you can see, there's lots of peaks and troughs, peak and trough, as you can see, and these are good signs of things. So what I'm keen on doing is I will buy a bit more shares into this as it's dropping quite a bit. However, I want to make sure that I'm actually saving enough money just in case it decides to drop a lot more. So if it drops more, I'll buy more. Remember, these stocks only got to go up. Well, it can continue to go down and bust basically, but let's face it, eBay's got a market cap of 23 billion. It's not likely to go bust anytime. It's a dividend payout of 2.3%. So even if I buy more, bring it down, I can still potentially make break even on it. So that's fine. So this is why I'll watch this stock Monday. I will probably purchase more shares to bring my purchase power down to the bottom line. That way, like I said, as soon as it goes up, I am likely to make a nice little profit on it, quite a big profit. So potentially, eBay could bring me. We're looking at. I mean, by the way, eBay already got me profit recently. I sold it for a profit. So I bought it here. Let's have a look at 1 month. I'll show you. Yeah, I bought it here, sold it here. So I made a nice 10% profit on that. Within a year period, as it's dropping more, it's likely to bring me about 20 to 25% profit on it overall. So it will be worth it. It's just I got to time it basically. So that's Eli Lilly. I've decided not to purchase anymore. I'm happy with my position here. ENI, it was in negative. It was in red yesterday. I purchased more. So yeah, it's in profit now. Great. Enphase Energy, I was going to give up on it, but I think I'm going to take a risk because watch this. It's had a massive free fall. Someone dumped it basically, but that's fine. It's got a decent market cap, as you can see, 19 billion and 2 billion revenue. So, and it's got a beta rating of 1.5, P ratio 50. So it's not really bad stock really. It's just having a horrid time at the moment. Now it's down. I purchased it here. I thought it was a good purchase, but hey, clearly it's not. So it's gone down a lot more. Well, 10% more since then. So what I'm keen on doing is I was going to just leave this one to the side, as in like just forget about it. Yeah, I purchased it, forget about it. But I'm going to buy more shares in this particular stock so that I can hopefully, when it goes up, I'll make a nice little profit on it. That's the reason why I'll invest a bit more into this particular one. With this one, the thing is with this, if you look at this graph, the line overall is declining on a declining slope. So there's the issue. But it's about finding that pocket and entry and exit point, right? That's what I'm going to look for. It could go bust. It could lose me a lot of money, but it could also bring me a lot of money. So it's a risk reward kind of play, this one. So I'm keen on investing more, but I will see where other stocks are, and then based on where other stocks are, I'll either buy more or I'll decide to put more money into elsewhere. GSK was down, so I decided to buy more shares today, and by doing that I brought the loss return down. Actually, I brought it down, so it's on rise now. I'm keen on buying more shares. It's another company that I really strongly believe in, and it's one of the big ones. They float in the American market and the UK market. So as for the UK market, they got 56 billion market cap. PE ratio is 11, just say 12. Beta rating is nothing basically. That's 0.58, much better than a lot of the stocks and indexes even, right? And dividend payout is 5. So revenue is 29 billion. if you think about it, that loss I'm taking now, if I were to hold it based on this, I make money on it. I'm still making profit. So it's no brainer. I'll hold on to it. I'll invest more. I'm confident and comfortable. But if you look at the graph, lots of ups and downs, which is great. Look at 1 year. So it's on a down decline, which is great. So for me, it would be good to purchase as it goes down. And then when it goes up, I make a nice hefty return. Because funny enough, in stock trading, these sorts of opportunities don't come often. You see, it's not every day we get these opportunities. You have to wait months and months for these openings. Normally they drop few percent here and there, but we are having a historical drop right now. This is a nice one. I decided to buy, invest £300 worth of shares into this one, and I will buy more of this because it's dropping quite a bit. Even then, I was trying to mitigate my drop, but it kept dropping more, which is great. So as you can see, the last 3 months it's had a lot of ups and downs, and the ups and downs are quite significant. So £81, and you had rise up to £100. We're talking about nearly £20 of gain per share. So that's fantastic. Any given day. Now if you look at over a period of a year, it's on a downslope, but it's rock bottom at the moment where it is. So I am keen on bringing my overall purchase power of this particular stock down to rock bottom as possible. So then the only way up is either bust or I make hefty, nice return on it. I bought JD when it dropped by 8%, so it's already giving me return. Lovely. Jet2, I'm not going to bother. Expedia, if it drops more, I will invest a bit more. The reason why I'm a bit hesitant on Expedia, the only reason why I bought it, because yesterday had a drop, massive drop. Hence the reason why I purchased it. As you can see, it had a massive drop yesterday, a 15% drop. So the reason why I'm hesitant on it, it could continue to go down. As you can see, the line is on a downtrend. It could go down a bit more. If it goes down a bit more, I'll purchase more, because when it goes up, you make nice profit on it. This is one stock I may have to hold for a longer period of time to make a nice little profit on it, or you may not. It might just be a couple of weeks, and then I can make 10 to 12% return on it. At the moment, I'm taking any 10% ROIs, even 8% ROIs. I'm taking them all day. I'm not holding them because, like I said, the stock market is so volatile. There are other stocks I can purchase when they're down. Like yesterday, I sold Chevron on 6.75%, and I invested all of that money into PayPal because PayPal had a massive drop. So in theory, even if Chevron climbed to say 10%, it would have taken a lot longer, whereas PayPal is expected to rise through the roof when it does, and when it does, it will give me a greater return because it dropped significantly below its price. So that's the theory behind it. Is look, I'll take my little gain from there, I'll put it into somewhere else where I'll make more money from it, basically. My UK stocks are doing terrible. I'm keen on getting rid of my property stocks in the UK purely because that was previously part of my long-term strategy. It's no longer the case, so I need to clear that money and put it somewhere else. Johnson & Johnson is currently on 2.44. The highest it reached for me was actually nearly 5% today, but I'm not worried about it. It's a royalty stock. I'll hold on to it. It's likely to go up to 8 to 9%, so I'll be patient and hold, and it will give me a nice return on that. I've got £600 invested into that particular stock, so inshallah it will give me a nice hefty return on it. So I'll hold that one. My other stock, Microsoft, I did put a bit more money into that one today because I wanted to bring the overall red down as possible. Nestle, I purchased I think one share of that to bring the negative down, and as a result, I'm in a bit of positive, as you can see. So yeah, that's great. Netflix earlier reached 5% for me ROI, I'll hold. I think it's likely to go 10-12% next week or week after that. I'll sell it then. If it drops more, I'll probably buy more shares. I was hoping they will drop more, but it didn't. It decided to rise instead. Nike, I did buy more shares in order to bring the overall drop down. As you can see, that worked in this case. Same with Nvidia. I did the same. I bought a little bit more, only like £20 more, but it offset the difference basically. Palantir, I did buy a bit more shares. I will buy more on Monday if it keeps dropping. If it doesn't drop, I won't buy any more. And as you can see, me buying shares, small shares into different companies, what it's doing is actually mitigating my risk factor. So it's overall balancing out my the risk potential. So if I was to put all my money into, let's just say, PayPal, Apple, Tesla, Microsoft, for example, right, I would have suffered massively. I would have been in negative hugely, right? And that could have been a panic. But because I spread my risks such a way that it doesn't hurt me. In fact, when I get profit from some but loss elsewhere, and the ones that's in loss now are likely to go into profit the week coming or month coming. And so it kind of works in that sort of seesaw manner, and I'm able to work with it better. Having said that, what I am doing at the moment, I'm still playing with it. I'm looking at my stocks currently, and going forward, I'm identifying certain stocks that I want to risk and put more of my money into when they go down, like Apple, Microsoft, Google, Amazon, them blue chip companies basically. And other stocks like Palantir, for example, or even Plug Power, I'm watching them and I'm playing with them, if that makes sense. I'm looking for an entry and an exit on them. And then like Qualcomm, for example, that was down when I purchased it because it was on a 8% down. When a company is on 8% down, it's either going to go down more or it's going to go up quickly. And in this case, as you can see, I'm nearly 4.5% up, right? So it makes sense to purchase them when they're down quite a bit. It's like no risk. But saying that, as I was saying, is that the risk factor and how I'm going to play with my thing going forward. My plan is to going forward, I'm going to watch these go into green, hopefully, and then I'll have certain royalty stocks like JJ and them lot, Samsung even, right, part of that blue chip company. Even S&P Global is part of blue chip company, even though it's down a lot now. What I'm going to do is, by doing that, I will minimize the risk factor when I play with other companies like this one, for example, Rivian. So if you look at this particular company, this company is where I can afford to invest when it goes down, hold, and you like to make a nice little return on them. Likewise, you got other ones like Plug Power. Even Pfizer is a royalty company, blue chip company, but because it's on a historically down, I'm investing more money into that particular stock. So it's got a nice, actually it doesn't, but I can't think from the top of my head. I think I showed you guys a couple of the videos, a couple of stocks earlier where they were nice little ups and downs. I think some of them are like for example Shell. This is a good one where you can time yourself when the market is down, because I think they tend to be quite volatile. As you can see, yeah, that's a good one. It's moving sideways, so buy here, sell here, buy here, sell here, kind of thing. Do you know what I mean? So buy here, sell here, buy here, sell here. You can time yourself better. So companies like these are really good for like quick return, and whereas blue chip ones, you may have to hold on to them for a little bit longer sometimes, but they are safe stocks. Same with Shopify. So yeah, this is where I am this week. I did buy into a lot of my negative stocks to strengthen my position within them. I'll continue to do so, and I'll feed back next week, and hopefully, let's see what next week brings.